the world was being crushed by the global financial crisis. Now, the impact has somewhat eased thanks to the rapid response by the international community. We actually came close to plunging into the depth of global depressions. But fortunately, we found a way to work together through the G20 and other forums, which allow us to avoid the worst scenario and return to modest global growth. We use the opportunity to begin reforming the architecture of the global financial system, an ongoing process that we must keep up. The global financial crisis is important for our collective effort to fight poverty. For Indonesia, poverty alleviation is a top priority. It is at the heart of our four-track development strategy, which is pro-growth, pro-jobs, pro-poor, and pro-environment strategy. But we know that our national effort can be more effective if it is synergized with effort at the global level. Financial inclusion is a central theme for all of us because most of those in poverty do not have access to financial services, savings, loans, transfer payment, and insurance at a reasonable cost. The exclusion of people, largely disadvantaged and low-income groups, from financial services will only perpetuate their poor lives. It is our hope that through access we can provide affordable financial services for people living with a low income. This in turn will unlock many financial opportunities to improve their well-being and close the economic and social gap. This will ultimately reduce poverty and inequality. Financial inclusion will link the previously excluded group with the formal economy, and they will eventually contribute to a country's economic growth. In my opinion, financial inclusion cannot stop at just opening a saving account and obtaining microcredits. The inclusion should empower the participants to use access to the financial services to widen the scope of their economic activities. Financial inclusion that addresses poverty must be innovative. It must not be business as usual, like regular financial services. For financial inclusion to promote growth, it has to move from opening an account in a bank to regular savings and finally to a relationship which enables the borrowers to access loans on a regular basis. How do we do this? Well, let me highlight 6 conditions that I believe are necessary for a successful implementation of innovative financial inclusions. The first condition is leadership. Since 2007, the government has introduced an innovative schemes to provide government guarantee. This strategy is implemented, among others, through a credit scheme called Credit for the People, Kredit Usaha Rakyat, or KUR, which is executed through commercial banks. KUR is a credit facility from banks, of which 70% is guaranteed by the government. The government guarantees the amount of 2 trillion rupiah, approximately 200 million US dollars. And this has the capacity to generate up to 20 trillion rupiah in microfinance activities. This way, micro-enterprises lacking collaterals are able to access bank loans. The Core Credit Program has also been expanded to target micro-entrepreneurs in need of smaller loans of less than 20 million rupiah, approximately more than 2,000 US dollars. The second condition is accountability and coordination. Indonesia is currently developing a national cluster program. This program is dedicated to strengthening coordination between institutions responsible for development of both upstream and downstream businesses. The National Cluster Program aims to reach small farmers, fishermen, or handicrafters at the upstream cluster with limited knowledge, skills, and funding. The third condition is diversity. In Indonesia, the main economic players are micro-enterprises that contribute some 99% of the total existing businesses. The fourth condition, ladies and gentlemen, is innovation. Technological and institutional innovation is critical to keep track of the diversity of demand for financial services. Through innovation, we can customize responses to meet the financial needs of those who have a low, irregular, and unreliable income. The fifth condition for innovative financial inclusion is related with culture. Not all people feel convenient to use modern banking services. In 2008, we introduced a national campaign called Ayo ke Bank, or in English, Let's Go to the Bank. Last year, we launched another campaign in 2009 with the slogan of whatever the product, ensure the benefits, understand the risks, and consider the costs. The second condition is a strong regulatory framework. Innovative financial inclusion will work on the basis of certainty when it is built under a strong regulatory framework. Equally important, they must observe international standards. Distinguished guests, ladies and gentlemen, innovative financial inclusion is currently receiving worldwide attention. We are all glad. Financial inclusion is essential to our effort in fighting poverty. It is a critical instrument to achieve the Millennium Development Goals. It also is in line with G20's commitment to address development issues and the principle for innovative financial inclusion. With that in mind, I hope that this forum could benefit from best practices and lessons learned from the experiences of different countries and institutions.